Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is February 1st, first day of a new month. Can't believe we've already ran through January, right? Feels like New Year's was just yesterday. But here we are in the second month of the year. And today we are going to cover Chubb Limited. They are an insurance company, so let's jump right in. If you want to know more about them, check them out at www.chubb.com, chubb.com. That is their homepage where I pulled this information from. Chubb is the world's largest publicly traded P&C insurance company and the leading commercial lines insurer in the U.S. with operations in 54 countries and territories. Chubb provides commercial and personal property and casualty insurance, personal accident and supplemental health insurance, reinsurance, and life insurance to a diverse group of clients. As an underwriting company, we assess, assume, and manage risk with insight and discipline. We serve and pay our claims fairly and promptly. We combine the precision of craftsmanship with decades of experience to conceive, craft, and deliver the very best insurance coverage and service to individuals and families and businesses of all sizes. Chubb has more than $200 billion in assets, reported $46.8 billion of gross premiums written in 2021. Core operating insurance companies maintain financial strength, ratings of AA from Standard & Poor's, and A++ from AM Best. Chubb Limited, the parent company of Chubb, is listed in the New York Stock Exchange as CB. That's the company we're looking at right now. Chubb maintains executive offices in Zurich, New York, London, Paris, and other locations, and employs approximately 34,000 people worldwide. So they have a worldwide presence, and they are an insurance company for individuals and businesses. That is their bread and butter. Now over to why we are looking at them today. Chubb Limited, and if you have a limited Chubb, I might go see a doctor. But anyways, that might be an untimely joke. But Chubb Limited, CB, is out of the financial sector. CB is their ticker. Closed out the day at $213.44, down 6.18%. So that is really why we're looking at them today. Anytime I see a company down 3, 4, 5, 6% in this case, I'm going to take a look at it, especially a dividend company, a company that pays dividends. That is what we are interested in on this channel. So let's see if this is potentially one to add to the watch list. 52-week range as low as $173.78, as high as $231.37. Obviously, I always like to look at companies whenever they are at or reaching or headed towards their 52-week low. This one really is kind of floating in the middle. It's not quite at the 52-week high, but it's definitely not at the 52-week low. So I might look at this one to potentially pull back further. A nice 6% drop on the day starts that process, but obviously a little ways to go. Market cap of $88.58 billion. Beta of 0.68, so it is less volatile than the overall market. PE ratio, price to earnings ratio, is $14.87. Nice PE ratio of 14.87. Earnings per share is $14.35, so nice earnings per share as well. Earnings date was today, so that might have something to do with it. I would go take a look at this earnings report and see how they did, right? Maybe a good reason for the pullback based on the earnings that was reported. For dividend is $3.32 paid out on the year. They are a quarterly payer, so divide by 4. We will see their quarterly payout here in a minute. Low dividend yield on this one, very low, 1.47%. So another one probably wouldn't meet my criteria. I usually look for something that is at least in line with the market or above the market. And if it is lower than the overall market, which is usually about 2.5 to 3%, 2.3 to 3%, somewhere in there, if it is lower than that, I want significant dividend growth. We'll see if that is the case on this one here in a minute. Last ex-dividend date was December 15th. 1-year target, at least according to Yahoo Finance, where I pulled this information. I am not affiliated with Yahoo Finance, just one of the places I look at for information. They have a 1-year target estimate of $238.06. So it does speak to some potential upside appreciation in the stock price, right? That's about $25 per share gain in stock price. But for me, I'm looking at overall, I want a better dividend yield, and I don't mind seeing my stocks go up, but I really want to see dividend growth go up, and I want to see a nice dividend yield. And I'm looking for income provided by the dividends, right? Passive income provided by the dividends paid out from the companies. That's what I'm after. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. Not affiliated with either source, just where I like to go for information. They present it in a very usable format, and they are you can verify that the information you are getting from each source is accurate, right? Back checking these, even look at a third source if you prefer. I would definitely do that just to make sure, like I said, the information you are getting is accurate. And according to the 29 stock analyst, stockanalysis.com has taken a look at this. They call it a consensus buy. They have a low estimate, $176.75, and that was real close to that 52-week low we saw a minute ago. That would be a 17.19% decline in the current stock price. If they happen to hit their average of $247.56, that would be a 15.99% increase in the stock price. And if it hit their high of $283.50, that would be a 32.82% increase in the stock price. Seems a little high there. Even the 252 or 247 there average is a little higher than what we saw for Yahoo Finance's estimate as well. So as we said, it's a quarterly payer. They do have a low payout ratio of 22.5%, so very low payout ratio, but the dividend growth 3.46%. That is pretty low for such a low payout ratio and such a low dividend yield, right? I would like to see much higher growth here, right? And they did have a dividend raise from last year to this year. Last year they were in the 80 cents raise. Around June they raised it up to 83 cents. So I would assume here soon they would do another raise, and maybe they get more aggressive and start increasing that dividend. Maybe something to look at. But this one, for me, just personally, being low yield, right? It's got pretty low yield. Nice low payout ratio. I do like that, but not a lot of dividend growth, right? I want to see something with a 1.5 or below 2% dividend yield. I want to see faster growth. That's just personal. That's just my opinion. I'm more on the income side. I'm getting closer to retirement, so I want to be able to live off that income and pay my bills with it. So I am looking for higher dividend growth. If it's low yield, I don't mind it if it's real high dividend growth, but this one doesn't really meet that criteria. Or I'm looking for higher dividend yield, and I'll accept lower growth if this was like a 4 or 5% dividend yield. But personally, I would not really be interested in this one right now. Maybe if it pulled back further to that 170 range and the yield increased back into the 2% range, that might be a time to look at it. Well, these are quick hitters trying to find value in the market. Been pretty rocky. Down on Monday, up yesterday, up again today. Most of my stocks in my portfolio were up. This one is not one I have in my portfolio. But let me know if you have it in yours. What do you think about the company? How has it been to you? And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel down below. Hit that subscribe button. Join me on this journey to financial freedom. Hopefully you are on your own journey as well. And if you are not and you are looking for a brokerage account, I do have a link to Webull down below. You can use that. Open up a brokerage account. Throw $100 in there or whatever you want. You'll get some stocks. I'll get some stocks. Get started on your journey to financial freedom. Take control of your future. That is what this channel is all about. And like I said, if you're interested in that kind of content, go ahead and hit that subscribe button down below and join me. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and put it all down below. And let me know what you think of the video. Let me know what you think of Chubb. Are there other insurance companies that you like better? I know some people like Aflac, Allstate. Prudential is one I have in my portfolio that sells insurance as well. So let me know down below in the comment section if you have better options, or like I said, if you have this one and you really like it. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in an investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest in any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select the criteria, or seek the advice counsel of a certified financial advisor.